Yo, what's up everybody? It is Tuesday, October 26th. New high once again in the Dow and the S&P. NASDAQ pulled back a little bit. Tesla was just up almost at 1,100. Get this. Elon Musk, his wealth is almost at 300 billion. 300 billion. It was up something like 38, almost 40 billion yesterday. It may have touched 300 billion today when Tesla was up at 1,100, but it closed a little bit lower. Tesla did like at 1,020 something or 300 billion. Like, we thought Jeff Bezos was rich, and now it's just like 200 billion or 196 billion, whatever Bezos has. It just seems ridiculous compared to Musk. 300 billion. I mean, these numbers are getting crazy, folks. I can remember back when the very first issue of the Forbes 400, you needed $100 million to get on there. There weren't a lot of billionaires on there at the time. I think the very first issue was like 1987. You maybe had one or two people, maybe like Sam Walton. You know, he maybe was like a billionaire. There were just a couple, but now it's just, these numbers are crazy, man. Like 40 billion used to be massive. Then Gates was there for so long, you know, like right around 100 billion. But 300 billion, I mean, it's mind-boggling. It's really mind-boggling. All right, let's talk about the market a little bit, folks. Fiscal flows. Yesterday was a really, really weak flow. Not yesterday, I should say. Friday was a really weak flow of only about 13 billion. That is very weak. But the 10-day average is still around 23.4, 23.5 billion. All right, I think we're at something like could be like 419 or 427 billion for the month so far. Like what I said, we're going to finish the month right around 500 billion. All right, that's not that bad. And at the same time, as I've been saying, bank credit loans are expanding. All right, they're growing at the fastest rate now since before the pandemic. I mean, and this is just the start. I mean, it's really starting to get going now. The only thing I mentioned yesterday in my video, we still have to be looking out for that December 3rd deadline. That's, once again, when these idiots are going to have to raise the debt ceiling, and it's going to go right back into this very contentious and you know, obstructionist, and who knows what's going to happen. But I think what I've been saying is from now until around the end of November, plus what makes it a little bit more questionable or precarious is that's getting into the holidays, and nobody's going to be really motivated to do anything. And we still don't have a budget. I mean, the federal government is running on a continuing resolution which runs out December 3rd. All right, so potentially there's problems there. Right now, I see the market just kind of flushing out some excess bullish sentiment. That's why today we were up in the morning, then we went negative, you know, then we closed up, but not, you know, we closed well off its best levels. But this is the process. Hang on. This is the process of working out this little bit excess bullish sentiment. We saw the put-call ratio yesterday. I think it dropped down to like 0.71. It's pretty low, maybe 0.74. I don't remember now. Around 0.71, 0.74, that's pretty low. The 10-day average of the put-call ratio has come down, but it's still up relative to the lows that we saw, you know, previously. So fiscal flows, I think, are okay. Bank credit definitely looking good and looking supportive. you got to understand something that, and I've been over this in past videos. If you look at what has happened with the flows, if you go back to March of this year, March 2021, we had a 984 billion flow that month, almost $1 trillion in 1 month in March, net spending. Then we went, then it was like April, May, June, it was like 760, 740, 720. Then July, August was in the 600, so it was like 650, 620. September was 576 billion. And this month we're going to be 500 billion. So the fiscal support has been chopped in half. I mean, we went from almost $1 trillion a month in March to right now we're at 500 billion. So that's like a 50% reduction in the flow. I mean, that is significant. And if it wasn't for this increase in bank credit, and again, I've explained this in the prior videos that, you know, bank credit is great. I mean, getting a loan is great, but you also have a debt that goes along with that loan. So it's not like you're getting money free and clear, like when you get a check from the government. When the government was handing out all that stimulus money, you know, that was ka-ching, money in people's pockets. Getting a loan, that's great, but you got a debt that you have to pay off. So there's no real net increase, at least to the borrower. I mean, there's a net increase to the banks because they get their money back plus interest. So that's something to think about. But that is supportive right now. And again, I'll just repeat that debt burdens as a percentage of disposable income, all right, that is at an all-time record low. So the ability to service the debt is very, very historically low. It's very reasonable right now, which means that households and businesses could take on more debt and be fine with that. Like, it's really about your ability to service your debt. If you could pay your bills every month and it's not a burden, you know, nobody's going to come after you. The bank's going to be happy. You're going to be happy. Maybe your credit rating is going to go up. So, I mean, that's not a problem. The problem comes when burdens reach a point where you can't service the debt. But we're a long way from that happening. Like, that was a condition in 2007, you know, when the market crashed. And again, I've made a lot of videos on this, that if we had the proper fiscal response and if we had the proper monetary response back then, we never would have had the crash. But anyway, you know, fast forward, we know what happened to the housing market. It's at all-time record highs. So that was something that as soon as the response came, you know, the crisis went away. So I'm bullish. The big thing now, aside from that December 3rd date, will be the Fed meeting, November 2nd, 3rd, where taper, they're going to taper, got to taper. And that should trigger a lot of volatility. I did a podcast today. I'll put it up tomorrow in my podcast site and on my website. But for now, that's the update. Don't forget, go to pitbulleconomics.com. Sign up for a 30-day free trial of MMT Trader. I'm the only one who has an applied approach to MMT. I take the concepts and understandings of MMT and I help you make money investing in the financial markets using those concepts. The vast majority of market participants don't understand our monetary system, not just even market participants, economists, Wall Street, the media for sure. Gain some knowledge. Go against ignorance. Go against that lack of understanding. You'll come out a big winner in the end. See you tomorrow. Bye.